Robert Theleen is Chairman and CEO of ChinaVest, the oldest American merchant banking company in the country. Thanks a lot for joining us, Robert. First of all, what do you think the biggest talking points are going to be there in Beijing?
Well, first it will be a non-talking point, the avoidance of discussing the elephant in the room, the matters of what's going on in the embassy. I think that Hillary Clinton, this might be her last visit to Beijing as Secretary of State. I think she wants to leave with a good feeling. Secondly, the relationship is not as fragile as some people would think. I think that on the Chinese side, the economy has lowered levels of inflation. On the U.S. side, the issue of foreign direct investment, they're going to point out that the U.S. is the only country that increased its foreign direct investment in China for the first quarter of this year. So there's a lot of good news intermixed with a lot of politics and intrigue.
Well, intermixed is another word you could use also about how deeply entrenched economic ties are between the two.
That's exactly right. And I think the point that I would make is that the relationship between the U.S. and China has gone beyond the two cities of Beijing and Washington. We have a broad industrial relationship. 160,000 Chinese students attend U.S. universities now. That was 50,000 10 years ago. So it's culturally diverse. It's industrially very sophisticated. The quality of U.S. investments are changing from financial investing to strategic investing, where multinationals are increasing their commitments in both technology and branding as the consumer economy develops in China. And both governments have kind of a lame duck, maybe a lame Peking duck in Beijing, in the sense the government won't be changing until fall, and in an election year, neither government is going to want to test the limits of Sino-American relations over these strategic talks.
Robert, I want to also talk to you about one thing which is not being talked about that much, and that is the yuan. But Tim Guyton is still calling on a revaluation despite the band being widened here. What's your response?
Well, I think that if you look at what's happening to the yuan and the movements towards internationalization in different ways, trade settlements, the dim sum bond market now being expanded to London, as China tests the movement of the currency as a currency that may one day compete with the dollar, I don't see that as a central issue as much, even though Secretary of the Treasury has to bring it up. But if you look at the revaluation of the yuan and over the last 2 years, you're seeing the impact of it already, lower FDI investments and lower levels of inflation. So I think the Chinese have got a pretty strong case to be made that revaluation any further won't take place for the rest of this year.
Well, how does that also play in and dovetail into the idea that they have, of course, about making the economy more reliant on the domestic side of things?
Well, that's tricky. If you've got an economy that's 50% investment, 35% consumption, thereabouts, that transition is going to take place with some very, very significant reactions. If you look at the World Bank report, which I think is, frankly, the new government's blueprint for reform, which calls for massive restructuring of state-owned enterprises. That was written by the China Research Institute, by Beijing itself. Those are the big issues for Beijing, and that means that the transition from investment to consumption is going to be on the heels of major industrial restructuring. The issues of corruption, party issues, those are issues which are now open to discussion in public forums. So I don't think there's any shying away from those issues, but you can expect, I think, more aggressive reforms in the next administration than the ones we've seen in recent years.
Robert Theleen, thank you so much for joining us from ChinaVest there, talking to us about this U.S.-China strategic economic dialogue taking place in Beijing.